Welcome to Philman Roll-Up and Associates Municipal Market Update for the week of February 16th, 2021. While many entities celebrate President's Day differently, our office was closed yesterday, so it's Tuesday, February 16th, 2021. Philman Roll-Up and Associates is a municipal advisor to government. My name is Adam Bauer, and I serve as CEO and President of Philman Roll-Up and Associates. Well, let's get into the municipal market update. On our first slide here, those gray bars represent the range that the municipal market data yield curve traded at between 2005 and today. And hopefully what you're noticing is that red line is near the bottom of that. And what that helps demonstrate is that we are at very low interest rate levels. And oftentimes I distinguish with how low for some years versus other years. I think all I can say now is we are at lows every year. So if you look at years 1 through 30, we're very low. Just take a moment to think about this. The 30-year AAA MMD has a yield of 1.34. So an investor could potentially be out their money for 30 years and the yield that they're receiving on that is 1.34. Whereas if they have the 1-year maturity, it's at 0.06. So in both cases, very low compared to historical standards. We're going to get into some of the why. On this chart, what we're showing is that yield curve and how it's compared over time. And once again, we're looking at the AAA MMD yield curve. If you go back 5 years ago, 2016, that red line represents somewhat of a normal looking yield curve. Starts off pretty low and starts to ramp up higher as we go on. But you go out 1 year ago, and that's that darker black line in the middle, and that's considered a pretty flat yield curve there. And now if you go to the green yield curve, you can see we start out very low, don't get high, but we do a little bit of a ramp up between years 5 and 10, but other than that, not much. And so once again, I've talked a lot about this since we've been doing the MMU. We remain in an environment where we have a flat yield curve, and we'll continue to monitor that and show you that changes over time. Another chart that we started talking about is how the 10-year US Treasury compares to the 10-year AAA MMD. And I described that during the kind of the COVID-19 initial shutdowns, investors fled municipals and then went into treasuries. And hopefully that's what you see with those spikes in those red lines at around March of 2020. Then until about August of that year, investors were moving towards treasuries and not as much in the municipals. And you can see that by that green line being a little bit lower than the red line. And this is an important distinction because if all things were equal, if all an investor was looking at was ratings, they would take into consideration that the AAA MD is double tax exempt, federal and state if you live within that state. Whereas treasuries, there's no state taxes, but there's still federal taxes on that. And so you would expect, if it was only looking at ratings, that you would have a slightly higher yield on US treasuries than you do the municipal MMD. Well, then November of 2020 rolls around and you start to see that US Treasury yield curve being a little bit higher than the municipals. And now you've seen that gap widen and it's continued to do so over the last several months. And as you see that green line start to go up and that red line continue to go down, you're seeing that trend. And so investors, I think, are feeling a lot more confident about municipal credits than they were when we first went into the COVID-19 shutdown. I'll explain kind of why this MMD continues to decline as we progress through this. Well, here we are. Here are the flows into the municipal bond funds. And since really that COVID-19 shutdown, we've continued to see money flow into the municipal market bond funds. And we've continued to see it in a pretty big way. Our picture here is blocking it to some degree. So we'll move that there, but you can see mass outflows in March and a little bit in April of 2020. But since then, we've seen a lot of money flowing in. And so investors continue to be very interested in municipal bonds. So we have all this money flowing in, and where does all that money go? Well, when we look at the historical volume, you can see that red line represents 2019 weekly average. And then 2020, you can see is the highest dotted line on there. And then the middle-ish is the 2021 volume. So we're still pretty early in the year. But a lot of projections before 2021 started were that 2021 would have more volume than 2020. And we still have a lot of year left for that to happen. But to date, we're not there. We are a little bit below the volume level that we were at in 2021. So keep in mind, we continue to see money flowing into the municipal bond funds, but we have a little bit less supply coming every week than we did last year. And so that's that supply demand equation where you have more demand than you do supply. And that is one contributing factor to rates being driven lower. Now we have the economic calendar coming up, and I've told you since we started MMU, this one is really hard to focus on with how hard it is to compare data, given that we have had this shutdown and just continue to adjust to that as we go forward. But here are some of the points that I think municipal investors would be monitoring. Finally, our last slide, I just want to move this picture again because it's something very important to show you, is Finland All App does have 2 additional registered municipal advisors. We have both Jen Arroyo Bustamante and Brendan Love that we've been able to add to this chart. So I encourage you to reach out to any of the Finland Roll Up and Associates registered municipal advisors. And until March 1st, I will be signing off, but I want to thank you again for checking out the MMU and look forward to talking with you in 2 weeks.